Step one, wake up early, gonna rise with the sun. Step two, get some good, some food in you. Step three, think real hard about what you wanna be. Step four, everybody just do your thing.
Wake up, today's gonna be a good day. 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 Wake up, today's gonna be a good day.
Oh, don't know what happened there. It kicked you off of the screen there. There we go. Got you back. Good morning, everyone. Welcome to Good Morning Crypto, where we turn your early hours in the morning into your edge and financial freedom. Today, I've got no headlines to tease. Instead, I've got CryptoBilly on here. So, how you doing this morning?
Doing good, BC. Thanks for having me.
Yeah, it's been in the works for a while. I know we've talked about it, so it's glad to finally get you on here.
Yeah, man. Yeah, I'm looking forward to it.
Oh, let's get some people prepped for success, and then we can dive a bit into some Bitcoin, and then talk about what you do on Cardano, a little bit about the Billy Goat Tales message, and then maybe talk about the Bitcoin conference, because I know you're going to be there as well, and I'm going to be there. The rest of the Piper Academy team is going to be there, so it'll be nice to meet in person.
Yeah, absolutely.
All right, let me get that stock heat map pulled up. I got that pulled up like always for the people. We are seeing a little bit of some movement in the pre-market so far. We've got Apple sitting down up 0.41%. In the pre-market, seeing some light buying pressure, up 0.35. We've got Nvidia sitting in that neutral range for the morning after a giant close to the downside, down 2.05. Berkshire Hathaway also sitting in that neutral range off of its close, looking up in the pre-market right now, 0.39%. We've got Amazon sitting to the downside off of its close, 0.68. Sitting up in the pre-market, up 0.38%. Got Eli Lilly down 0.82%, looking quite neutral in the pre-market so far, just down 0.01. We've got ExxonMobil sitting to the upside, 0.06, and in the pre-market, seeing some light buying pressure, down 0.14. We've got Tesla looking to the upside for the morning after a fairly neutral close yesterday, up 0.33, looking up 0.84 in the pre-market. We've got P&G up 0.52, looking quite neutral in the pre-market so far though, up 0.27. We've got Microsoft, which closed a little bit to the downside yesterday, 0.18, and in the pre-market, seeing some light buying pressure, taking back all the losses, up 0.36. We've got Google down 0.87 off of its close, up 0.31 in the pre-market though. We've got Meta sitting up 0.45, and in the pre-market, continuing on those gains, up 0.46. For the crypto side of things, we are very, very mixed here on this daily. You've got big outliers like Pi down 0.63 and BCH making some gains. It's funny, I talked about BCH last night and it's up 6% on the daily. We've got Bitcoin sitting neutral with 0% on that daily. We've got Ethereum up 1%. We've got XRP down 2.3, BNB up 0.2, Solana down 1.9, Doge down 1.3, but seeing some green on that hourly. Cardano down 1.4, Tron sitting quite neutral, up 0.1. We've got SWI down 5.5, Chainlink up 0.8. We've got Avalanche down 0.3, Stellar Lumens down 3.4. We've got Leo token taking back some of those spots that it had lost over the weekend, back up to 15 on that market cap and down 0.6% on the daily. We've got Toncoin down 1.6. We've got Shiba Inu taking back some spots that it had lost over the weekend as well, down 1.6. H-bar down 4.1. Bitcoin Cash keeping that number 19 spot, up 6%. And we've got Litecoin down 1.2%. For those fear and greeds, stock markets still making its way back to neutral. We have been getting some decent news from the Trump administration, not on the tariff front, but some other news. We'll tease that a little bit later in the week, though. We do have crypto back in greed, up 6 points from that neutral range yesterday. After a slight move to the upside at the end of the day, I did talk about that being the time that we would probably see some upside movement would be yesterday, especially since we're going to be seeing some data coming out the rest of the week that might drag markets down just a little bit. We still got that top side liquidity at about $96,000. We'll kind of look at that when we get over to the Bitcoin chart. We got that 3-day looking quite similar with that broad range of topside liquidity surrounding 96,000, going from 95,700 all the way up to 96,200. So quite a range for some topside liquidity. Very easy move for these market makers to push price up towards the upside and clear all that out. And then we're kind of sitting kind of bare. Once you get to that 1 week, it's still sitting at that same zone. But that 2 week, looking quite empty for liquidity. So it's starting to pile back up towards the downside as we talked about yesterday. We've got some back at that $83,000 point. Kind of sets us back at a very equal low, but still sets us to a point where we could spring up. Really going to depend on the kind of data we see going into this week and the next week. I'll skip out on that 3 month because we all know that 3 month says the liquidity is at 64,000 and no one wants to go that low right now. So let's hop over to the economic calendar real quick because we did have some data coming out this morning. We did get a lot of GDP data coming out of Europe. We got some out of France. We did get some out of Germany as well. Scrolling on down. There's a lot of data that came out of Europe today. We also just got GDP growth rate for the European Union, looking like a slight slowdown on that. So not anything near as drastic as we are looking at in the US, looking for a 2% decrease this morning when they're seeing just a 0.2% decrease on their economy's contraction. So they're also quite ahead of us in their rate cutting cycle. So maybe some hopium down the road if we can figure out some these tariffs. Let me scroll it on down. Oh, am I on the there we go, 29. There, I was on the right area. There we go. We got some PCE coming out of the United States tomorrow. That will be the big market mover. Let me scroll it back up. There we go. Coming soon. We got goods trade balance looking like a bit of a decrease there. You know, we have seen quite a slow up of goods coming into the U.S., especially with these tariffs on China. And that's our biggest importer. So looking for a little more balance on those goods. We are looking at the housing price index coming out this morning. That will be at 9 a.m. Eastern time. And at 10 a.m. Eastern time, we get those JOLTS jobs opening. Looking like a bit of a decrease on that. Some slight positive news that might allow those market makers to push price to the upside. A little bit later in the day, we do get some retail sales year over year coming out of Japan. I will be keeping my eye on that because they do have their rate decision this week. So that's another thing we'll be talking about a little bit later in the week. Other than that, not any real big data to continue on for today. Most of that big data is going to be tomorrow coming out of the United States. We do have Bitcoin sitting above a range that I had talked about, looking to potentially hold this as support. We will kind of have to see how that goes. We are sitting right on top of VWAP though. We did quite a bit of dancing to either side of it yesterday, and we've just made some lower highs here on our shorter term time frames. Let's zoom this on out. Take a look at that 4 hour, because that 4 hour does look like there is the potential to continue to the upside here. Let me zoom that on out a little bit better. And you can kind of see here our MACD, and our MACD is looking at a quite indecisive point. Let me get you pulled back up there. I don't know what's going on with Streamlabs. We got our MACD at a very indecisive point, as our MACD line and indicator line are moving quite sideways together here. So we've been in a bit of a zone with some resistance to the top side at about 96,000. That's that 382 on our fibs. I've been talking about that level for quite a while, and we're looking to potentially get up there today, sweep that liquidity, and all of that liquidity goes up to that 236, and then it's kind of just a bear. So looking for that potential pullback, cool down. Some of that daily oscillators that we've been talking about have been overheated. Let's zoom it on and take a look at that 1 hour. And as you can see, it's a quite sideways ranging movement. We have been starting to make some lower highs here. Let me get that marked out. Lower high, potential to sweep this top side, clear out all of that liquidity, negate these highs from over here, and then the potential to really drag price back down, as this hourly is a bit overheated as well. We are getting that curvature on our MACD, curvature on our prime oscillator, and your money flow is sitting quite red here on the hourly. You've got pretty nice volume though, but it has started to slow down quite a bit. We are looking at that top side resistance to potentially come back into play all over again today. We'll kind of have to see if we can sweep a little bit higher than that, grab the liquidity that's sitting on top of the 382, the 236, and then really drag it back down. I do have 90,800 as a price target I've been looking at. Let's zoom it on and see what the 15-minute and the morning are bringing our way, and then hop over to CryptoBilly and talk to him about some Bitcoin and what his thoughts are for going forward. We've got that 15-minute getting some slight curvature back towards the upside here. It is looking a little bit like that goose head OC likes to talk about all the time here. So getting that nice little curvature, but it's curving on back up as a money flow is coming back in here in the morning. Your volume starting to pick up as well. So really looking to try to negate some of these highs at 95,500 and come all the way up to that 96,000. You might have to see a little bit of some cool downs, maybe see that sweep above the highs, really turn that into some quick support before you continue on up towards the top side liquidity. We do have that data drop coming out at 10 a.m. So a lot of that could really drag the market back down. So look for those quick explosive moves with some money flow this morning, as that True 7 has also flipped to the green. All right, you got any thoughts on any of that this morning, Billy?
That's a lot, man. That's a lot. That's a big. That's why I like your show in the morning, because you can get it all like real quick and move on. You know. So,
oh yeah,
I'm looking forward to this week. Actually, I think it's going to be a good solid week for Bitcoin. So Lifer last night, he's in Dubai, right? He was streaming yesterday, and he said he wakes up in the morning, I guarantee you I'm going to be in the gains with Bitcoin, because he's figured out, and this is not scientific, this is not like algo or anything, but typically from Monday night to Tuesday morning, good trading, good volume, tends to be up. So he likes to go in on a trade. Now that's just him, right? I'm not saying that I do that or you should do that, but, and guess what? I got up this morning, I looked, and sure enough, we were up.
Oh yeah. Oh yeah. I mean, and I've noticed a lot of patterns too. And that's why sometimes before I go to bed, I like to take advantage of that Asia trading time zone. I'm like, okay, what was the trend for America? Well, Asia either likes to continue the trend or reverse the trend. And you watch that money flow. It's like right as I'm getting ready for bed, I watch that money flow. If the money flow really starts switching on that shorter term time frame, I'm like, okay, we're gonna set along, and then the key area that I have marked out for the evening, that's gonna be my exit point, and then I go to bed. And sometimes I print money, so it's kind of nice.
Yeah, man.
Oh yeah, especially for he's right in that time zone too. Gets that nice little switch over from Asia to America, because I know from what I've heard, that European trading zone is a little bit dead. They just like to continue what's going on. So
Yeah, most likely. Yeah. Yeah. So, no, I think it's been incredible to me how Bitcoin has held up during, all this turmoil. We did have on April 2nd, the traditional market and Bitcoin bounced down, but it bounced back. And since then, it's really come up and held good support. I said, if we get above 92, I think we're going to be in good shape. At the time, 92 was a good resistance. And now we're on top of it. Let's see what happens, right?
oh yeah, oh yeah, and that's right around some areas I had been looking at as well. And it's kind of nice. I was not expecting us to really get this high this quickly. So they really had some money coming in from those traditional markets. I think they're hopping on the bandwagon that we've all known for quite a while, that Bitcoin is a hedge. It is a very good hedge asset as well. We might not get back up to those highs we had seen anytime soon with what's been going on in your traditional markets, but it's held up quite a bit better when the whole markets has dropped. So I have been liking that. I've just been DCAing in. Apparently you've been doing the same.
Yeah, I buy Bitcoin every week, have been for years now. I've been talking about on my Twitter X spaces, and I join all these other spaces, so not just mine, but there's a lot of non-YouTuber X space people, traders, and I try to join, and I've gotten to know some of those folks over the years, and I've been talking a lot about this. There's going to be, I feel, my humble opinion, which is worthless, by the way, but my opinion is that we are going to really see a supply shock. I mean, for the first time. So like, we've never had to worry about, hey, I'm going to go buy Bitcoin and there's some there to buy. But when you think about it, you have BlackRock, you have all of the ETFs that, own 5-6% of Bitcoin supply. You have Michael Saylor. What's he? 4%? And I saw a post from Gary Cardone's brother, Grant. He's fixing to buy $5 billion of Bitcoin. You're getting this adoption. So when all of these people are buying up this Bitcoin, there's only 21 million, only 19 million, little over 19 million in circulation. Guys, there's 8 billion people in the world. They just are now being exposed to Bitcoin. I think over the next couple years, certainly beginning right around this year, I think we're going to all of us YouTubers, people talking about it, I think we're going to be talking about supply and what that looks like and how you navigate that. And of course, with that type of supply shock, you know what price does when there's no supply or limited supply. So I think that's going to be a huge narrative as we move forward. And we might get some relief since we're, whenever we go into the real bear. And I'm just the opposite of Piper. I'm big in the 4-year plan. I still believe in the 4-year cycle. I will believe in that until it breaks, right? And then when it breaks, I will come crawling over to Piper's side of that equation. But right now, I'm like, no, I got to go with the historical data, and who knows? I'm just basing my thesis on that. So I haven't sold any of my Bitcoin, and I probably tell you the truth, I'm probably not going to sell my Bitcoin. It's so you can borrow against it now, and if you want, you can take it off your ledger. And I know this goes against the ethos. I'm just throwing it out there, but you can buy the ETF and you can actually get loans on that through a traditional bank without going through a DeFi protocol. If you wanted to go that way, I know it's, we're at that really weird crossroad where we all came in because I'm big in believing in the small government, right? I don't want those guys looking into my financial data, and I want to pay low taxes, and I like to be secluded. I'm almost a prepper. I have a whole situation where in case the total bottom falls out in life and in world, I'm ready, right? However, some of these products are making it where it might be an option. I might end up doing something like that.
Oh yeah, because I mean, you could still use Bitcoin even if the internet goes down, and that's something that a lot of people don't even think about. It's like, hey, did you stack up some Bitcoin? Well, we're gonna value it at this while everything's kind of broken, and you can do offline, off-chain transfers of Bitcoin. And so it's just as easy. You still got those tap pay devices, and you can just be like, boop, there you go. There's your Bitcoin. Easier than trying to carry around some gold and having someone potentially rob you of that. So Bitcoin really helps out in multiple assets and multiple ways too, whether the internet works or doesn't. And then as soon as the internet's back up and running, then you can put all those transactions online, and then Bitcoin just continues. It's very easy. Whereas if your TradFi system goes down, there's going to be a shit show on it. There's no other really way to put it, because if those banks go down, nobody's transferring money around in your traditional markets, and then trying to pick that up and keep it on going, people aren't really going to be with it as much. They're like, oh, we see how broken your system is, and we've been complaining about it forever. So here we go. Here's our new system. Of course, I think people will be worrying more about like toilet paper and how to eat rice. Like, hey, how do I cook this, as opposed to like, how do I buy this? But we'll kind of see how that all goes. I see Darren Does Things had said the issue is we're relying on Chad, Saylor, and ETFs holding up price. When they can't hold, Saylor sells, step in, and we dump. And he dropped out again. I don't know what's going on with Streamlabs this morning. Hopefully he gets right back. But yeah, that is a big problem that we've been seeing, especially with how much capital they've kind of been getting a little bit exhausted. We did see them really step out. Those ETFs saw some giant outflows, and that's where you really saw price dumping for Bitcoin. Let me see. Let me send him a new link, see if that works for him. I don't know what happened, but he dropped out. But yeah, we have been depending on these traditional markets to kind of hold up Bitcoin. And there's only so much capital that these traditional markets have, and they will run out. And at that point, when they start selling, it's going to be a cascade effect. If Saylor has people that decide that they want to exchange Oh, he said it kicked him and he will rejoin. So give him just a second. If we see that cascading effect where Bitcoin's price really drags back down, and then you see Sailor having people that, okay, instead of being like, okay, well, I bought these preferred stock options where instead of having my bond that I paid with you transferred to your preferred stock, I want to cash out and I want you to pay me. And he's been spending all of his money to buy Bitcoin. And at that time, that Bitcoin's price is extremely low. You can't see him get a loan to pay back these investors. Then you're going to see a bit of a problem there. And he's going to have to sell for a loss. If he sells Bitcoin at anything under $68,000, he is selling at a loss. He hasn't been buying as strategically as other people have. Instead of buying and having his average entry price go down, he's been buying and his average entry price has been going up. So that is a big problem. We have been depending on these giant corporations to hold up the price of Bitcoin. And that's the very antithesis of the Bitcoin message. I'd rather have more people own Bitcoin than several big people own Bitcoin. So we'll see how it goes. I don't think they hold up price, especially if the whole market's kind of going down. Bitcoin still, I know everyone's like, oh, it's the hedge, it's gold, it's digital gold. It's still a risk asset. Its a market cap is 1 trillion. It's a little over $1 trillion. Like that doesn't even touch the biggest stocks in our stock market. So it makes it a little hard for Bitcoin to hold up a little bit better when, like, say you just have BlackRock where they're like, we are no longer recommending at this time that you buy Bitcoin. You should potentially look at selling it because we're going into a bear market. If they sell all of their 1% holdings, that's a giant decrease in the market cap. And people don't really think about that. It's like, oh, it's nice that they're buying. Yeah. But what about when they're selling? Because you know that at some point they're going to sell. And that's going to cause a giant cascading effect of selling. A giant cascading effect of selling that we've never seen in Bitcoin before, because most of us are retail. And we're like, you know what? It's fine. Your price go down 40%. Fine. You know what? I'm not looking at cashing out for another 10 years anyway, so it doesn't matter. But what happens when your traditional markets are like, okay, well, we're selling all of our Bitcoin holdings. Only like a few people that are ultra wealthy that don't really care about a 60% drop aren't going to sell. They're like, it doesn't matter. I'm just going to borrow against it anyway. Instead, it's grandma that bought through an ETF and she's only got $10,000 and she doesn't want to see that go to 4,000. She's going to sell and they're going to do that for her. And that's going to be a giant cascading effect of selling that we've never really seen before. So I'm a little worried on that.
Yeah, about a year ago, I had some friends, knew I was in Bitcoin and crypto, and they're older, they're retired, and they're new to crypto. We're not sure about crypto. And I explained it all to them at dinner, and we talked, and they set up a Coinbase account right there and, connected their bank, and it, took a little bit, and they threw like $100 in there. And they ultimately, however, this is like I said about a year ago, ultimately decided to go with gold. Now, in their minds right now, they made the right decision, right? I mean, look what gold has done over this last year, right? So they're so happy, but they're older, they're retired. And since they had this, historic move, I mean, gold hasn't done this since like the early 2000s, right? When it busted out of 300 and 350-ish and broke out. So here we are, 30 years later, or 25 years later, and it had this historic move. So in their mind, they're They're thinking, wow, we made the right decision. And for their investment thesis and timeline, they probably did make the right decision, right? Because you can't argue with the results of what they have. I think they got in. I'll go back a year, see what the chart says, but I'm sure it was, under $2,000 or something. It was crazy. It's 20 something, maybe 2,200 or 1,800 or something. So they've done really well, but they're not the typical, you know, person, but they would be the typical person for the ETFs. They would be the typical person buying those ETFs. So
Uh, I just pulled up gold versus Bitcoin. Let me get to Bitcoin on a better time frame as well. We'll pull those both up on the weekly. And I've done this comparison quite a bit for people. We'll get gold on that weekly as well. Scrolling on down for Bitcoin. Jeez. Quite an explosive run up to the upside as well. Let me get that switched over to that chart. And people can kind of see here. We've got, if we scroll it on back, from 2023, we'll go off of this bottom where you also saw this bottom on Bitcoin as well. You do this measured move towards we'll just go off of current price here. We're looking at 536% to the upside from the lows. You do that for gold here, and it's quite a nice move, and it's not been making the retracements that Bitcoin has. So you've got a 100% move to the upside there, about 106%. So Bitcoin still outperformed it, but when you're talking about safety, for someone like that, they're going to feel more safe with 100% gains as opposed to the 500% gains where it's like, what is this internet money you're talking about? And that's a big barrier we've seen.
exactly. So financial planners, it's all about the person's own, the investor's own risk tolerance, their timeline, their available disposable income, whether they want to take dividend income. There's so much that goes into really creating a financial plan, and for them, it was a better fit. Now, being a Bitcoin guy, I don't want to tell them, like, it's a bad move, right? Because I wanted to make it their decision, and wanted to talk to them about what they're comfortable with, right? But I was just happy for them to see, because gold hasn't moved like that in a long, long time. So it's great the fact that they made that decision and they actually won. They actually did very, very well, because gold could have just kept on doing what stayed at its, in a whole year, move $100. So it was great to see that they actually won. I was happy for them, even though they didn't take they didn't really get into the Bitcoin. So
Hey, I mean, it's a step in the right direction. I'm always happy when I hear that people have hedged themselves properly. I know here on Piper Academy, before I even joined, Piper was warning about recessionary pressures, and this was back when we still had a different president. And I've been warning people about the possibility of recession since we kind of started printing money during COVID, because I saw that as the real catalyst that everyone's been ignoring. We were already at the point where we could have seen a recession, and then we're like, hey, you know what? The economy is kind of closing down, and we're just gonna inject trillions and trillions and trillions of liquidity, but it's okay. No one needs to pay for that on the back end. We're just gonna manufacture all this debt, and it's still yet to be paid for. And you've got the government running at levels of debt that we've never seen before. And all of this is going to come crashing down around us. And I don't think anyone's ready for the '08 style recession that they're going to end up feeling here in this decade. It's coming.
Yeah, it's coming. It's coming, no doubt. I believe that. So luckily for us, we're all in crypto and Bitcoin. I feel like I'm totally ready for anything like that to happen. And I trust me, in '08, it was big for me being in home building, in '08, owning my own business. It was a crash that I'll never forget, and it made me better. Right, I learned how to pivot. I learned how to do things a lot better, and so really, in some ways, '08 was a blessing for me. I lost millions. It was tough, man. It was tough. But I pivoted, I learned, I grew, made smarter decisions. And that's why I always say, God has a plan. Like, the bottom line is, you don't know what your destiny is, what your future is. And when you're going through that hell storm, and that's what that was, you just got to have faith. You have to have faith that you're there for a reason. You have to figure out what that reason is and then overcome it and get better from it and visualize your future the way you want it, right? And not just acquiesce to it. Make it, create your destiny. So it was tough though. Financially, it was very tough. One of the toughest things I ever had to navigate through in my life.
Oh, I remember my parents struggling where they're like, okay, so are we gonna put the light bill on this credit card this month, and then we'll just pay off the gas bill next month, and then just rejigger that whole debt thing that they got going on. It was a thing. It was quite wild, and mortgage rates, they were on a not a fixed rate, and they were on a variable rate, and they really got screwed. Because when they bought their house back in like the early '90s, not having a fixed rate was completely fine. You were talking about 2% interest rates, so it didn't matter. Might go up a little bit, like 2.2, might go down 1.8. It all averaged out okay though. But that's those hard hitting times where it's like, okay, well, everything's fine. We prepared for everything being fine, and if you didn't prepare for anything being less than fine, then you get more than screwed. And a lot of Americans are not prepared for less than fine.
Yep. Agreed.
So we'll kind of have to see how it all plays out. I know Darren Does Things says recession hits in the summer if feds don't cut in June. And I talked about that last year. I was like, look, if we see these interest rates cut a point, and they cut them extremely quickly. I was like, the big worry is inflation kicking its head back up. And that's what we said. That's what we've started seeing, because they cut that initial rate extremely quickly. A lot of money flooded in when it shouldn't have been flooding in. And now you're at a point where it's like, okay, well, we either stagnate or we force more money in, which also creates a bigger problem. And that's why they're not looking at cutting anytime soon. And it doesn't matter either way, because either decision they make, if they cut here at this next decision, you're going to see inflation pressures increasing, job numbers continue to decrease, and recession. If they cut in June, I think you still see a recession. It's at a tricky point where no matter what you do, you kind of cause a recession. So
Well, I think if you just boil it down to just one question, if you asked all the Americans, you even asked the chat, but the question would be this: would you rather pay a percent or two more in inflation rate, so things going up 1 or 2% more, or would you rather crash the economy because you didn't lower rates? In other words, would you rather have a lower Fed rate so that you could get some money flowing, or would you rather have pay a little bit more for with inflation? I think most people would say, I want a lower rate and I want the economy to keep growing, and I want business expansion to occur that creates so much opportunity. So the fear of things are going to cost a little more, that's one of the Fed's decisions, right? So they're always looking at inflation and jobs, right? So if you have that, big deal to me. Like, we just experienced some of the most inflationary periods of my lifetime. I mean, I think the only other time was back in the 70s for me. And I was a young boy, you know, like in the 70s, didn't really pay attention to that. Early 80s, I started paying a little attention to it. So, but to me, it's like simple, man. I think personally, this is just my degen humble opinion. It's totally worthless, but I personally think Trump is right in that. Listen, we need to lower the rates. Yes, it doesn't line up with your typical. We got to have a job loss, right? We need more jobs lost. We need more higher unemployment, and we need the current inflation rate to go down to 2%, where their target is. But I'm like, okay, we don't have that, but business development, business expansion, business investment in America is going to really pay a price if we don't get that rate lowered. You know, EU lowered 8 times already, I think 7 or 8 times already. Like, we'll see what Japan, you brought it up at the beginning of the show. Let's see what Japan does. I would bet right now they're going to lower their rate. So what I don't agree with Trump is he doesn't have to be so nasty when he calls Chairman Powell all kinds of childish names. It's like, come on, man, just your approach, what you're saying, I agree with, but how you're saying it, come on, man.
Well, he's a very crass man, and he likes to have fun with it. I dropped
Yeah.
that poll in the chat. Right now, we've got 5 votes, and 4 out of 5 votes say they'd rather just pay a little more. And I mean, that's really, I'm okay with paying a little more. It sucks in the now, but like, if that keeps things a little bit better, I'm okay with it. I still know that recession, it's not going to prevent recession, but what it might do is keep the recession to a point where it's not as drastic, where you're not seeing an '08 level recession where for the next 18 months, everything's in the shitter. Where for the next 18 months, you're taking out debts at levels that you don't want to repay. And when things get back to good, you're paying for all of that time that you would spent acquiring debt in the bad times. It's counterintuitive.
That's a better question. Do you want to pay a little bit more, or do you want to go into a recession? I mean, that is truly the question on the table right now. So the Fed doesn't want to lower the rates because it doesn't hit their indicators. You know, wait a minute. It might be time to throw those indicators away and say, we're going to go into a recession unless we lower the interest rates. So lowering the interest rates would mean we got to pay a little bit more for inflation, but we avoid recession. I'm choosing to pay a little bit more because I don't want to go through a recession. I've been through a recession. It's not fun. You know, 2 of them actually in the 80s and then in 08. Then those are real recessions, you know, not just a flash in the pan recession.
Yep. And I mean, Darren does things, has a good point where it's just crash it, get it over with, build back quicker. The longer they don't lower rates, the worse the recession will be. And I mean, there's 2 fronts on it where it's if you're going to crash it, let the recession go, you want to be a little bit better managed. They're trying to pay down a bunch of debt right now. You've got the debt versus Doge clock, which has been running. You've been seeing your debt slow up a bit, and you've been seeing that Doge clock kind of running up a bit, and that's what you want to see. That means that they're spending less money. They're cutting a bunch of debt. I'd rather my government be better positioned to make it to the other side of a recession, which also means that the American people at the end of the day would be better positioned to make it to the other side of recession. Maybe it goes on for a little bit longer, but it's not as hard of a recession because we've planned better. We've got things that are in the works where instead of Americans trying to ship over their goods to meat to China to be processed there to be shipped back to the US, we just do that here. which is an article that we teased on CCM's channel last night, or a lot of goods that need to be moved over from China to America for no reason when we could just make that here. And if you make those things here, then that's more money in your local economy. These are all things that Donald Trump's trying to get done before he's really like, you know what, recession time, let's go, but everyone's better prepared for that recession.
Yep. Agree.
So it is about that time to head over to your morning motivational video, isn't it, sir?
Okay. That was fast.
Oh yeah, it goes quick. It goes quick, especially when you're having a good time.
Yeah,
I
man.
know. I know. It was a pleasure to have you on here, and definitely need to do it again.
Yeah. Anytime, BC. Anytime.
Yeah, I didn't get to ask you anything about building on Cardano. We basically just focused on Bitcoin and the economy. So we'll
Fine
have
with
to
me,
get to
man.
we'll have to get to the rest of those some other time. But make sure to tune in to the rest of the shows here on the Piper Academy. We've got that morning market report with Piper and OC. We got trading with OC at 8 p.m. Eastern time. Markets after dark with Lunar Beaches Crypto, and I will see y'all at the morning motivational here in just a second. Make sure to wake up, because today's going to be a good day. I don't know if you got anything you want to leave for the people before we head over there.
No, thanks for tuning in. We appreciate all the support and love the Piper Academy. I always say that Army Piper does the best macro breakdown on the internet and on YouTube. So support the Piper Academy and all of his peeps, including BC. And we got a great relationship, our two companies, and going to keep growing it. So thanks for tuning in. Love you guys. And we'll see you over at Motivational Mindset.
See you there. Have a good one.